Okay, let's be honest. Seeing the market drop over 10% in a month, it's unsettling. Trillions of dollars wiped out. It's enough to make anyone nervous. If you jumped into the recent rally, you're probably feeling a little anxious right now, maybe even thinking about selling, and that's totally understandable. It's human nature to want to protect what you've worked for. But before you do anything, let me tell you what one of the smartest investors ever would do. Warren Buffett. Buffett's been saying the same thing for decades. When things look scary, that's often when the best opportunities show up. It's about turning bad news into your friend. He doesn't see downturns as disasters, but as sales chances to buy amazing companies at prices he wouldn't normally see. Remember 2008? It felt like the world was ending. Everyone was rushing to get out, convinced the sky was falling. But Buffett? He didn't panic. He actually invested more. He famously wrote an op-ed, "Buy American. I am." It wasn't just a patriotic gesture, it was a signal to everyone who would listen. This is a chance to buy great companies at a discount. He believed in the long-term strength of the American economy, and he saw the fear as an opportunity. The market kept falling, of course, another 26% drop. It was scary, truly scary. But those who held on, who bought a little bit at a time as prices went down, a strategy called dollar-cost averaging and just waited, they were rewarded with incredible gains when things turned around. They didn't try to time the bottom, they simply stayed the course. And those who sold in a panic? Well, many missed out on one of the biggest bull markets in history, a recovery that took years to fully unfold. Here's something to really think about. 99% of Warren Buffett's wealth wasn't made when he was young. He wasn't born with a silver spoon. It was built over time, through patience, consistent investing, and the incredible power of compounding. It shows you that it's not about getting rich quick, it's about playing the long game, letting your investments grow steadily over decades. So, Buffett's core strategy is simple. Be greedy when others are fearful. And right now, fear is definitely in the air. There's a lot of uncertainty, inflation, interest rates, geopolitical tensions. But history tells us that's often when the best opportunities arise. It's when valuations become disconnected from reality. Today, I want to share 3 companies that have been hit particularly hard in this recent downturn but still have incredibly strong foundations. These aren't speculative bets. They're established businesses with solid track records. If you're looking to think like Buffett, this could be a great time to take a closer look. Because remember, panic is temporary, but smart investors will be the ones who benefit in the long run. Let's start with a company that's really powering the AI revolution, Broadcom Inc. with ticker symbol AVGO. And right now, the market has given us a bit of a gift, knocking its stock down about 25% from its high. It feels scary, but it could be a really smart entry point. It's a chance to own a piece of a company that's essential to the future. In the first quarter of 2025, Broadcom's revenue jumped 25% year over year, proving that even in a volatile market, its business is thriving. That shows you the business is doing really well, even with everything going on in the market. So why the drop? It's mostly fear. Just like we've seen before, panic selling creates opportunities for those who are willing to look beyond the headlines and focus on the fundamentals. Here's the thing. Broadcom isn't just a chip company. It's the engine that makes a lot of AI possible. Their network switches, custom AI chips, and fiber optics are essential for the massive data centers that power everything from chatbots like ChatGPT to self-driving cars and the cloud services we all rely on. They're not just making chips, they're building the infrastructure of the future, and the demand is only going to grow. AI infrastructure spending is expected to soar past $200 billion per year by 2028, and Broadcom is in a great position to benefit. They're already working with major players in the industry, securing long-term contracts. The question is, will you take advantage of this discount, or will you regret missing out when the market recovers? This isn't about timing the market, it's about recognizing value. Next up, we have Taiwan Semiconductor Manufacturing Company with ticker symbol TSM, a true giant in the tech world. You might not recognize the name, but you use their products every single day. TSMC is the company that makes the chips for all the big names: NVIDIA, Apple, AMD, Qualcomm. They're the backbone of next-generation technology. They're the world's largest dedicated independent semiconductor foundry. And yet, the market has really punished the stock lately, down over 25% from its recent peak. Why? Well, there's some concern about geopolitical tensions surrounding Taiwan, and a bit of short-term panic about a potential slowdown in the global economy. But here's where Buffett's wisdom comes in. These kinds of sell-offs can be incredible opportunities. Geopolitical risks are always present, but TSMC is a critical part of the global supply chain, and its importance isn't going away. TSMC is down over 25% from its peak, which is similar to what we've seen in the past before big rebounds. Will you see this as a chance to invest in a leader, or will you get caught up in the fear? Think about it. Nvidia, Apple, and AMD are all investing over $300 billion in AI infrastructure this year alone, and they all rely on TSMC to make their chips. They're locked in with long-term contracts, ensuring a steady stream of revenue for TSMC. Even with the recent drop, Wall Street is still very optimistic about TSMC's future. Analysts predict significant growth through 2026 and beyond, and for good reason. With AI driving demand for chips, TSMC is perfectly positioned to thrive. Plus, they have long-term contracts with major companies, which gives them a lot of stability and predictability. So will you see this as the opportunity it is, or let short-term fear hold you back? Finally, let's talk about Nvidia Corporation with ticker symbol NVDA, a key player in the AI revolution and a company that's seen its stock tumble nearly 30% from its peak. It's easy to panic when you see a drop like that, but remember, this could be a chance to buy a truly innovative company at a discount. Nvidia isn't just competing in AI, they're leading the way. They're not just making graphics cards anymore, they're providing the core technology that powers everything from data centers to autonomous vehicles. If you believe AI is the future, and most experts do, this is a stock you need to consider. Last quarter, their revenue soared 78% year over year, driven by the incredible demand for their AI technology. That's not just growth, that's explosive growth. Is Nvidia really in trouble, or is the market overreacting? Tech giants like Microsoft, Google, and Meta are doubling down on Nvidia's technology because it's simply the best. They're integrating Nvidia's chips and software into their core products. And yet, investors are acting like its dominance is fading. Here's what they're missing. Nvidia's software ecosystem, CUDA, Omniverse, AI cloud services, isn't just a feature, it's a huge advantage. It's hard for competitors to catch up because Nvidia has built an entire infrastructure around its technology, creating a moat that protects its market share. And their latest chip architecture, Blackwell, is setting a new standard for AI processing and power efficiency. It's a game changer. The biggest companies in the world are investing billions in Nvidia's tech. The market may be panicking, but history shows us that these moments create the biggest opportunities. Fear-driven selling has created a rare window of opportunity in Nvidia, and in these other companies. If you're looking to think like Warren Buffett, now is the time to do your research, understand the fundamentals, and consider taking action. Remember, panic is temporary, but the investors who stay smart today will be the ones who benefit tomorrow. These are challenging times, but they also present incredible opportunities. Don't let fear dictate your decisions. Take a deep breath, do your homework, and remember what Warren Buffett has always said. Be greedy when others are fearful. And remember, investing is a marathon, not a sprint. Now, if you found this video valuable and you want to diversify your investments beyond traditional stocks and bonds, I have just the thing for you. Even though I believe that investing in a low-cost index fund is the best long-term investment for the average Joe, the benefits of solid physical gold are hard to deny. I think of physical gold as insurance against unpredictable times, and I'm not the only one. In 2023, central banks added over 1,000 tons of gold to their reserves, the second highest annual purchase in American history. And in 2024, central bank got another 290 tons of gold in just the first 3 months of the year. If the biggest banks in the world are buying tons of gold, I'm sure there's a good reason for it. I found a company that allows ordinary Americans to own and securely store physical bars of gold as part of their IRA account. The best part is that they're giving away a free guide to teach you all about investing in solid physical gold. If you want to learn more about how gold can protect your retirement savings, just click the link in the description to receive a completely free gold IRA guide.